Okay, so imagine a machine that's responsible for uh, generating nearly a quarter of the electricity for a continent-sized nation.
Right.
We're talking dams, wind farms, solar parks, the things that literally power millions of lives.
Mm-hmm.
Now imagine taking that machine, which has been owned and controlled by the state for 60 years, and in the blink of an eye, handing the keys over to the free market.
It really does sound like the plot of a business thriller, doesn't it? But that's exactly what happened in 2022 to the largest power utility in Latin America.
It's a transformation that I honestly think is one of the biggest business stories of the decade, and yet so many people just miss the details of it.
Oh, for sure.
We're looking at a company that went from being a government arm to a corporation with no majority owner, all while, trying to keep the lights on.
And that's the perfect way to frame it. The giant awakens. It isn't just some catchy title, it's the reality.
Right.
When you read their 2022 annual report,
Yeah.
which we have right here, along with the ESG report, they actually call 2022 a watershed moment.
They say that themselves.
They literally say it's the most significant year since their founding back in 1962. We aren't just looking at a fiscal year, we are looking at a DNA transplant.
Exactly. And our mission today is to figure out if that transplant was successful. We're going to look at the billions raised, the massive culture shock, and how a company this old plans to dance in a digital world.
Uh-huh.
But first, for those who might not follow the energy sector every day, give us a sense of the scale. Just how big is this giant?
To really get the scale, you have to visualize the map. This company holds 23% of the country's total installed generation capacity.
So that's nearly 1 in every 4 light bulbs.
Pretty much. But the real dominance is in the grid itself. They operate nearly 74,000 kilometers of transmission lines.
74,000 kilometers. I actually did the math on this. That's almost enough to wrap around the Earth twice.
Precisely. It represents about 40% of the national grid.
Wow.
So they are essentially the central nervous system of the country's energy sector. If you're moving electricity in this region, you are likely using their highway.
Okay. And here's the kicker. They're the world's second largest renewable energy company.
See, that's a detail that always surprises people. You hear old state monopoly and you just assume smokestacks.
Right. But because of the geography and the history, 97% of their capacity comes from low-emission sources. We're talking massive hydroelectric plants, wind, and solar.
So coming into 2022, you have this green colossus that was sleeping, in a sense, under state control.
Exactly. And the whole macro theme of 2022 was waking it up through this process they call capitalization.
Or, as most people would call it, privatization. But before we get into the drama of how that happened, let's look at the scoreboard. When you turn a state giant into a private company, the first question is always, did they make money?
Well, the answer is it's complicated. And this is where you have to look past the headlines. If you look at the top line, gross revenue, it was stable. 41 billion.
Okay, so the underlying engine is running fine. The cash register is still ringing.
Yes. But then you look at the bottom line, net income, and it came in at 3.64 billion. That's still a lot of money.
It is, but the year before, it was 5.71 billion. That's a 36% drop.
Ouch. A 36% drop in profit usually sends investors running for the hills.
Normally, yes. But in this case, the context changes everything. That drop isn't because they forgot how to generate power. It's the cost of the transformation.
Nah.
They had to make massive provisions. They launched voluntary severance programs, which we'll get into, that cost a fortune up front. Plus, there were some very complex accounting changes in how they book transmission revenue.
So it's kind of like buying a fixer-upper house. The first year, your bank account looks terrible because you're paying for the new roof and the plumbing.
Right.
But the actual value of the house is skyrocketing.
That is the perfect analogy. And they are definitely fixing the roof. Their investments were up 21%, hitting $5.63 billion. That signals a return to growth mode, which had been sort of stifled for years under the old budget constraints.
And despite that profit drop, they still paid out dividends.
They did. $1.5 billion went back to shareholders. But speaking of massive payouts, we have to talk about the cover charge for this whole privatization deal.
The cost of entry.
As part of the agreement to become a private corporation, they had to take on these eye-watering financial commitments to the government.
I saw these numbers and I had to reread them. A $32 billion obligation to something called the Energy Development Account.
Yes, 32 billion to the CDE, which is a sector fund,
Yeah.
and on top of that, they paid what's called a grant bonus of 26.6 billion.
26.6 billion. That's the GDP of a small nation, just
Yeah.
written as a check to the government.
It just highlights the sheer magnitude of this transaction. This wasn't just selling a few shares, it was a structural refounding of the entire sector. But let's not pretend it was all smooth sailing. Aside from the check writing, 2022 threw some serious curveballs at them.
Right, let's get into the fiction. You mentioned the profit drop was partly operational. What were the actual headwinds they were facing?
I'd point to three main challenges. The first one is a bit technical, but it's crucial because it hit their wallet hard. A revenue dip in the transmission business.
How much of a dip?
Revenue there fell by 10%.
Which feels counterintuitive. We just established they own 40% of the grid, the lines are there, the power is flowing. How do you lose 10% of your revenue?
This is where the difference between a utility and a store really comes in. In a store, if you sell more shoes, you make more money.
Simple enough.
In transmission, your revenue is determined by a regulatory formula. In 2022, there was a shift in the rate-setting cycle. So essentially, the regulator changed the timing of how revenue is recognized.
Okay, so they moved the goalposts a little.
Exactly. But there was a second factor, inflation. These contracts are adjusted for inflation using indices like the IGPM and IPCA.
Hold on, let's break that down. IGPM and IPCA. Why do these acronyms matter so much to the bottom line?
Think of it this way. The company's actual costs, steel, cables, labor, are going up with real-world inflation. But their revenue is adjusted based on these specific indices. And in 2022, due to some macroeconomic weirdness, the IGTM index behaved in a way that was negative for their contract adjustments. So their revenue didn't scale up as much as their costs did.
So it was a paper loss based on math, not a physical problem with the grid.
You got it. The math was against them.
Okay, what was challenge number 2?
The second challenge was very, very human. We call it the VSP, the Voluntary Severance Program.
The layoffs. This is the renovation we were talking about earlier.
It is. When you move from state-owned to private, the number one mandate you get from investors is efficiency. The company needed to slim down, so they offered a buyout package to employees, mostly those who are near retirement.
And how many people took it?
Over 2,500.
2,500.
Yeah.
That is a massive chunk of the workforce. And these aren't just random employees. These are likely the people who've been there for 30 years.
Precisely. And that creates a huge risk, brain drain. You're losing institutional memory.
Yeah.
Imagine a dam operator who knows exactly which turbine vibrates a certain way when it rains too hard. That kind of knowledge just walked out the door. So the challenge for the company was managing this exodus while also trying to hire about 1,000 new, fresh talents to modernize the culture.
That sounds like a massive culture clash just waiting to happen. You have the old guard leaving and a bunch of digital natives coming in to run 60-year-old dam.
It's a very dangerous bridge to cross. And while they were dealing with all that internal chaos, they had a third challenge: regulatory uncertainty.
Yeah.
Even though they're private, they still answer to the regulator, AEL. And there was a lot of anxiety in 2022 about the upcoming rate-setting review for 2023.
Basically worrying if the regulator was going to cut their allowance.
That's exactly it. The company had to spend the year actively fighting in public consultations to prove that their cost structures were legitimate. If they lose that argument, their profitability for the next few years takes a big hit.
So they were fighting on 3 fronts: financial math, cultural upheaval, and regulatory battles. But despite all of that, the big capitalization happened. Let's zoom in on that moment. June 2022.
This was the main event. On June 14th, the company listed new shares, and this diluted the government's stake from 61.69%, a clear controlling majority, down to 36.99%.
And just like that, the government is no longer the boss.
Correct. The company became a corporation with no single controlling owner. It's a dispersed ownership model now. The offering raised $33.69 billion.
Wow.
But there's a detail in here that I just absolutely loved. It wasn't just big banks from Wall Street buying in.
You're talking about the workers, right?
Yes. 370,000 local workers used their severance funds to buy shares in the IPO.
That actually gives me chills. 370,000 people. That's not Wall Street. That's Main Street betting their retirement on this company.
It was a massive vote of confidence from the actual workforce of the country. It turned the privatization into a social event, not just a financial one. But the financial mechanics are what unlocked the real value. 3 days after the share offering, on June 17th, they signed new concession agreements for 22 of their hydroelectric plants.
Okay, this is the part I really want to unpack. Why does signing a new piece of paper for an old dam changed the value of the company so drastically?
This is the aha moment. Under the old state regime, those 22 plants operated under something called a quota system.
A quota system.
They were forced to sell their power at a regulated low price that barely covered costs. It was a public service, essentially.
So they were selling champagne for the price of water because the government said so.
Exactly. The new concession agreements, which last for 30 years, shift these plants from the quota to the free market. Now, it doesn't happen overnight. It's a gradual release. 20% of the energy is released to the free market per year starting in 2023. But it means they can now take that massive amount of energy and sell it to the highest bidder.
That is the definition of value unlock. They have the same water, the same turbines, but now they can charge what the market is actually willing to pay.
And that spread, the difference between the old quota price and the new market price, that is why investors were willing to put up $33 billion. They're betting on that margin.
They also did some cleanup on the corporate structure, right?
Yeah.
I noticed they moved to own 100% of the Telspires hydro plant.
Yes, this was the optimization phase. For years, the company was this tangled web of special purpose entities, joint ventures, where they often didn't have full control.
Right.
In 2022, they started cutting that Gordian knot. They bought out partners to get 100% of Telspires and increased their stake in another plant, San Antonio, to over 72%.
Basically saying, if we're going to do this, we want to be in the driver's seat.
Exactly. No more management by committee. They want agility.
Speaking of agility and modernizing,
Yeah.
we have to look at the ESG report. For a company that relies so heavily on nature, this isn't just PR fluff, it's operational reality. How did they stack up?
On the planet side, they had a very strong year. They achieved a 32% reduction in greenhouse gas emissions.
Wow.
And remember, they were already starting from a very, very green baseline.
That is significant. Did they make any new promises?
They did. They joined the Action for Nature platform and committed to the Task Force on Nature-Related Financial Disclosures. But the one that really caught my eye was the biodiversity target. 0 loss of vegetated areas.
0 loss. For a company that has to maintain thousands of miles of transmission lines running through forests, that feels incredibly ambitious.
It is bold. It implies a level of monitoring and care that is very, very expensive. They also want to increase carbon sequestration in biomass by 5% per year. They're trying to prove that a massive infrastructure company can actually be nature positive.
Okay, what about the people side? We talked about the layoffs, but I'm sure there's more to the story.
The VSP, despite being a layoff program, was framed as a social metric because it was voluntary and came with benefits. They also poured $22.7 million into private social investments. But, and I have to be the bearer of bad news here, there's a glaring red flag in the safety data.
I saw that. The lost time injury frequency rate?
Right. It came in at 2.78. The report explicitly states the target was not met.
For our listeners, 2.78 doesn't sound like a big number. Why does that worry you?
In heavy industry, when you're dealing with high voltage, massive water pressure, construction safety is the proxy for operational discipline. If your injury rate is missing targets, it suggests that processes are getting loose, or maybe that the distraction of the privatization is taking a toll on the ground. It's a serious warning light.
That is a great point. You can't be efficient if you aren't safe. And finally, governance. With the government stepping back, who's actually running the show now?
That's the biggest shift. They installed a completely new board of directors structure. They even created a transformation office specifically to oversee the chaos of the change. And interestingly, they reported that 100% of integrity-critical suppliers underwent due diligence.
And I saw a stat about whistleblowing, something like 84% of reports were resolved.
That is crucial. In the past, state-owned enterprises in this region have struggled with corruption. Publishing your whistleblowing stats and resolving them is a clear signal to the market. We are cleaning house. We are transparent.
And for the 6th year in a row, they linked executive pay to ESG targets.
Yes. Yes. If the bosses want their full bonus, they have to hit their climate, diversity, and safety goals. It aligns their wallet with the company's conscience.
So we have the history, the challenges, the scorecard. Now let's look forward. They have the money, they have the freedom. What are they going to do with it? What are the big objectives for the coming years?
Management has boiled it down to a new mantra, the 3Ds.
The 3Ds. Catchy? What are they?
Digitization, decentralization, and decarbonization.
Okay, decarbonization, we know more renewables. Digitization makes sense, updating the tech. What does decentralization mean in this context?
It means breaking down the old bureaucratic pyramid. Instead of every decision going up to headquarters, they want to empower the local units. It's all about speed. But honestly, the three Ds are just the enabling strategy. The real objective, the one that will make or break them, is objective number two, dominating the free market.
This goes back to that trading aspect we hinted at.
Yes, this is a massive cultural pivot. They aim to become a major player in energy trading.
Explain that distinction for us. How is trading different from just selling what you generate?
Before, they were engineers. They made watts, sent them down the line, and got a fixed check.
Right.
Now they need to be traders. They need to predict weather patterns, hedge against price spikes, buy energy from others to resell at a profit. They need to structure complex deals for big industrial clients.
So they're moving from a utility mindset to a Wall Street mindset.
Exactly. They are building a commercial engine to maximize margins, not just generate power. And it requires a completely different skill set: data analytics, risk management, financial engineering.
That explains the digitization part of the 3Ds. You can't be a trader if you don't have the data.
Precisely. And to fund all this, Objective 3 is innovation and efficiency. They invested $512.3 million in R&D in 2022. But they are also ruthlessly cutting costs. They're centralizing corporate functions like shared services to stop duplication.
No more two HR departments doing the same thing.
Right. It's the classic private equity playbook applied to a utility giant. Strip the fat, invest in tech, and trade aggressively.
It's a massive undertaking. We've covered a lot of ground today. If you had to distill this whole massive report down to just 3 key takeaways for someone listening, what would they be?
I think there are 3 pillars to this story. First, the privatization wasn't just a financial transaction, it was an unlocking mechanism. That shift from the quota system to the free market is the single most important value driver. They're sitting on a goldmine of energy that was being sold for pennies.
Got it. Value unlock. What's number 2?
Second, do not let the headline numbers fool you. That 36% drop in net income is deceptive. It masks a massive investment in the future. The grant bonus, the severance payouts, these are one-time costs position them for much higher profitability later. You have to look at the renovation value, not just the cash flow for 2022.
Context is king. And number 3.
They are betting the house on green. By becoming a corporation, they aren't abandoning their environmental roots. They are doubling down on them. They know that in a global market, having 97% clean energy is a massive competitive advantage. They're positioning themselves not just as a power company, but as the premier green power solution for the region.
It's a fascinating pivot. They're taking a legacy asset, literally concrete and water, and trying to turn it into a modern, agile, digital trader. So here's the question I'm left with, and I want our listeners to think about this. This company has the assets. They have the dams, the lines, the scale. But can a 60-year-old former state monopoly learn to dance fast enough to dominate a competitive digital free market?
That is the multi-billion-dollar question. They have the thighs, now they need the speed.
It is going to be fascinating to watch them try to turn this ship. Thanks for walking us through all the details.
My pleasure.
And thank you for listening to this deep dive. Let us know what you think in the giant dance. We'll catch you on the next one.